Welcome to the new weekly outlook, everybody. So as always, we're going to go through the fundamental analysis, then go ahead and move on to the technical analysis with Stefanos, and also to those celebrating, happy Memorial Day.
Absolutely, guys. Hope everyone's having a great weekend. Happy Memorial Day, as Sharma said. I'm looking forward to getting into the charts and breaking this down for you.
All right, awesome. Let's get started. So let's start off with the Fed. So there's a couple of articles that I do want to go through. So the Fed won't flinch as labor market starts tailing off. What we have seen in the past couple of months is obviously the labor market starting to pick up a little bit. We did see, some fluctuations where we did see some better numbers around the holidays. We started to see those numbers starting to drop down. And that's kind of what we're expecting right now as well. So with the NFP coming out this month or this week for last month, we're starting to see that the payrolls are probably going to increase by a slightly decreased number compared to the previous 2 months. So we're going to see a payroll. The sentiment is an increase by 325,000 in May after rising 428,000 each of the previous 2 months of January and February. And then until now, right, from January, February until now, we start to see some of those strong numbers. That's pretty much what this graph is about. And then coming into closer to May, we're expecting to see a little bit of a drop down happening there. And then the unemployment rate is also seen to fall to a pandemic low of 3.5%, and the average hourly earnings are forecasted to rise. So we're starting to see a little bit of a stronger labor market. This is exactly what the Fed needs, and this is exactly what any central bank needs in order to increase their interest rates and kind of show them that, hey, our labor market's getting better, which is, again, a part of their dual mandate, right? Managing their unemployment and then also price stability, which is interest rates. So that's also one of the key components that the Fed has to kind of regulate and maintain and kind of keep an eye on. So these are the fundamentals that are going to be very, very important as we're moving into June when the next interest rates is supposed to come out and where the sentiment has been put out that we are going to continue to increase interest rates by a half basis point hike. As we continue down, one thing that I really like about this article that you guys can go back and take a look at is they break down Canada, they break down Asia, so China, India, Australia, Bank of Japan, pretty much the same thing, that they're going to enforce the message that the central bank must keep easing even with inflation above 2%. So they are still expecting that quantitative easing and they're going to maintain their accommodative stance. And then they have a couple of other central banks and areas that you guys can, read into if that's what you're interested. So this was a very interesting article that I saw as we're especially going into a week with a ton of employment data, job cuts. We have ADP non-farm coming out. You have NFP coming out at the end of the week. One other article that I do want to go over when it comes to the US is going to be Biden to meet Powell to discuss economy as inflation bites. This is the first time that they're meeting after Biden announced that he wants to keep Powell on for another term back in November. So they're going to be meeting up tomorrow. They're going to be discussing the state of the American and global economy. And this is mostly coming from the decision and from the data point that they see that Americans and citizens all over the world are being hit hard by inflation, which is obviously hurting Biden's standing with his voters, as elections will be coming up, in a couple of months or so. We're already starting to see some minor news about that. So this is their first meeting since, like I said, Biden chose Powell for the second term. So it's going to be very interesting to see, what are some of the things that we can expect to see, what are some of the changes, or is this just going to make the sentiment stronger that the Fed is talking about raising interest rates by half a percentage hike, this in June and then also in July and then September pull back. So when we start to talk about that sentiment and as it gets stronger, obviously the investors are getting a little bit more volatile in their investments. But really last week we start to see a little bit of a better and calmness in that sentiment because we start to see the sentiment that if we do have the interest rate hikes in the next 2 months, then there is a potential that in September, we're going to pull back and we're just going to pause on the rate hikes. We're not going to see any rate hikes. And that would make a little bit more sense. And that would kind of support the economy in general. But obviously, a lot of this depends on the employment data that we're going to be seeing. We saw PCE coming out last week as well. So those two data points are going to be very, very important. And anything related to those two data points are going to be very, very important when it comes to raising interest rates in June.
I think that's where that bounce on gold came from.
Yeah, and then also if you look at like US 30, we closed off very, very strong.
Yeah, absolutely. You got a nice recovery.
Yeah. And then going on to the UK side, so what I do want to go over just very quickly, and then you guys can go over the rest of the article. It's very similar to what we have looked at last week, and it's that the Chancellor is going to be giving out pretty much one-off payments and discounts to the UK citizens, which is primarily targeted to help with the energy prices. And this is around, 15 billion pound, almost $19 billion aid package. But the interesting thing here was there is still an outlook for energy prices to continue rising. And so he has mentioned, as we continue down here towards the end, he did say that he will act again, in a similar way if need be. So if the energy prices continue to increase and the economic state doesn't really improve much, then he is going to pretty much look into other aid packages. So this kind of tells you about the economy itself, where prices are rising, and this bill that they've pretty much introduced, which is part of this aid package where the money is coming from, they're also placing more taxes on energy companies in general on the money that they're making from these high energy prices. Yet a lot of the consumers are not able to afford these high energy prices. There's a cost of living issue that's going on. All of this kind of ties into inflation from a lot of different directions. So right now, again, from an investor perspective, does raising interest rates make sense for the UK? Is the economic data there? Is the economy there to support it? Not at the moment. And that's kind of what's causing the pound here, as we're sitting at high technical levels, we're starting to see pound kind of fluctuating. So I thought this was very important as we transition into the technical analysis side and just a little bit with Stefanos, that we're starting to see that the pound versus crisis usually seen in emerging markets. The reason for that is, as you continue down, increase in interest rates, it won't be enough to rescue the pound, and that's because there's a current account deficit going on because of its relationship with the European Union over Northern Ireland, and how we talked about there's going to be a bill that's being introduced, and the EU said that if the UK enacts on that bill, then the EU will take actions against the UK, right? And then there's also questions about the central bank's credibility, which all that's combined together is creating the perfect storm, which we're talking about is a recession. Can we see a deeper pullback in the economy than we did back in 2020 when the pandemic hit? Or what are the steps that the Bank of England is going to take in order to help prevent that? As you continue down, they start to break all these different topics down into like political attacks, which is mostly, with the UK and the EU, and then also whatever is happening with Boris Johnson and what his state is at the moment. So the Bank of England has faced multiple political attacks this month over its response to inflation. And as you continue down, there's more details about this. So that's on the macro fundamental side, macroeconomic side. We're going to move on to the economic calendar and briefly just go over that. So yesterday or on Sunday, we start off quite easy. Today, same thing, start off quite easy. We had a US bank holiday, Memorial Day. So there wasn't too much going on when it comes to US pairs, but a lot of the yen pairs, for example, broke out of their major consolidations, which we will break down here on the technical side in a little bit for you guys. So we're starting off quite easy. We're setting up from technical analysis perspective. We're setting up really nice, and we have more fundamentals that will be coming out finally after a lot of these pairs are breaking out of their consolidation levels, that we're setting up great opportunities in the next coming month and next coming weeks. And then the rest of today, a lot of low impact news, not too much coming out. That's going to be creating a lot of volatility, but we have great data points that will be leading into, those high impact news. So if you're trading the yen, you obviously want to pay attention to the unemployment rate that's going to be coming out here shortly, retail sales, the production, industrial production, and then as you continue down, consumer confidence. So these are the three main things that we'll be watching out for in Asian session. In pre-London session, you have a lot of Euro news coming out to pay attention to if you're trading the Euro. And then after that, a lot of low impact news for the rest of the London session going into Tuesday. Mostly, I would be more paying attention to the German unemployment change, and then also what are the core CPI flash estimates here for the Eurozone. And then as we continue down going into New York session, we have HPI, we have the S&P HPI composite coming out, and then consumer confidence as well. So this is going to be one of the key fundamentals to watch out for as well. This is going to kind of help us understand, will the interest rate hikes make sense? And where's the consumer sentiment sitting right now? Because the consumer is the core of the economy. And then as we continue down, rest of it is quite easy. Unless you're trading the Australian dollar, then you have GDP coming out. And then going on to Wednesday, that's really kind of when the fun starts leading up to NFP. So I'm just going to be highlighting some of these key data points to watch out for the remainder of the week. So of course, if you're trading London session, you got all the Euro news, but the fun really starts when you see that the JOLTS job openings coming out. This is what's really going to help us set up for NFP. So you have JOLTS job opening coming out, you have the manufacturing PMI coming out, and then you have some FOMC members speaking. You have a Chinese bank holiday in the Asian session. And then as we continue down onto Thursday, to add on to those unemployment data that's already coming out on Wednesday, you have the challenger job cuts. And then you want to pay the most attention to the non-farm employment change. This is a day before NFP comes out on Friday. And essentially they're using the same exact data. So the automatic data processing. And then when you come down here, they're pretty much using the same exact data, but this is a broader perspective of what's happening from all across the board, right? Excluding the farming industry. So those would be some of the key points that I would really watch out for when it comes to getting ready for NFP. And then now we're going to go ahead and move on to the technical side with Stefanos.
All right, let's get into the charts over here. Just reading an article over here on DailyFX. So we'll start with the monthly. You guys know I have my historical levels marked off. We have, let me just move the video. We have 167,500 up here, that previous support over here. It's a whole zone between 167,500 and 168. We ended up getting that little rejection over there with that top wick on that candle. The next monthly candle, looking at the more recent candles right now, ended up creating this top wick, came all the way back down to 156, that previous resistance over here, and then has been snapping back to end the month over here as like a weaker bearish candle with a long bottom wick to possibly fill if some of that Brexit stuff does end up happening like Sharma just went through, right? Or if we actually do start increasing rates and that's helping the pound, you're going to see the next candle maybe form a bottom wick, possibly past the high of that candle and continue up to 167,500. Looking at the weekly, as you can see, is a classic, high created after breaking a range. Create this high, we reject this level, continue all the way back down to 156 over here, tapping off this previous resistance and holding a support at 158 over here with some strong bullish candles. You have this candle. Let's bring this over here. You have this bullish candle over here closing at 158 with a strong bullish candle. Actually closed around 160 with a wick to fill over here. Next candle, grab liquidity, never passed the low of the previous, flip bullish and close bullish. Now we have a small wick on the current weekly candle, already past the high of the previous candle. So are we going to continue up to some of our levels up here that we could see on the lower time frames? I'm looking at 162 as a possible rejection level with our previous wick right here and some of these candles that we see to the left over here, right over here as well. All right, so can we get a rejection here or can we get that breakthrough? Looking at the daily now. So the daily looks like we're holding a healthy support over here. We're definitely holding a higher low right in this area over here. And now we're starting to approach that level around 161,500, 160. Yeah, I would say 550, 161. Yeah, somewhere in the 600 level over there. But what I am looking at is you got this previous resistance that turned support right in this area. You can actually make this a little bit thicker. We'll adjust it as we go down the time frames. But the more important thing is you're creating these higher lows right now, and price is now passing previous resistances to continue up possibly. Now we'll see if we have any trend lines on the 4 hour that maybe we actually ended up breaking over here. And you could say over here, we've been making these lower lows, lower highs, tapping into 156. Ever since then, We respected our support right down here, grabbed liquidity, higher lows since then, and we've been pushing up, creating a higher lows ever since tapping 158 for that last time over there. So are we going to start rejecting this level up here? I'm just going to mark this off like that and then bring this in just a little bit. You got this consolidation over here to the left. That price could be, if you take a look at where price is at right now, could we be rejecting that level? But I'm just looking at more recent support and resistance. And right now, actually, you know what? I am going to mark that off because you get that resistance to the left as well. Right here, price had some trouble over here. And now we're, obviously rejected this for, a few 4-hour candles over here. Can we break through that level and continue up to, I'd say 162 flat right there. So what I'm going to do is just erase this. I'm going to take a look at the trend that we've been respecting over here. Draw this right here as well. Price has just been making higher lows, higher highs, breaking this recent resistance over here. Got a nice clean close above this candle, past the high without a bottom wick, and just skyrocketed up today, right? 5 a.m. during the New York session. So now we were rejecting this level. Looks like we're holding a support right here. Now let's see where we could go from here. I'm just gonna adjust that right there. That looks about good with that resistance right there. So right now, as you guys can see, we are holding that support. Are we gonna reject this level again and possibly break below? So now looking at the 1 hour, can we be breaking below to continue back to 160,700, or are we going to break above this level and continue back up to 162? Let's look to the left and see any kind of rejection levels and see how many pips we have to those levels. We want to keep an eye on this level. You got about 20 pips, more than that, but 25 pips in this area that you could definitely be grabbing and moving. I'm just going to adjust this. Right around there. Let's look at the 30-minute. Yeah, 30-minute. I want to see price close above these wicks over here, or at least close like a strong bullish candle over here. If we close like a strong 30-minute bullish candle right there to start the Asian session, could the next candle create a bottom wick and continue up from here? Now you got to ask yourself, does Asian session on Memorial Day have enough volume for us to do something like this? Or should you wait for that close above this level, wait for that retest, and then take price back up and grab this whole range for 25 pips? And you could very well leave a run at 162 up here, right? But don't underestimate possible sells right here. If we start rejecting this zone over here, right? We start rejecting this level and we're at a high, and price kind of wants to, after bouncing off these levels, making these higher lows, we end up getting these pullbacks over here. So can we get some kind of a pullback if we reject this level and continue back down before continuing back up? Or can we come back down to this area and then continue back up from there? Like, there's many things that could happen. So you just got to keep an eye on price action and see what levels are rejecting where, and wait for your smart trades. So that's what we're looking at on GJ. I would personally wait for that close above that resistance right there before taking anything, and not just take the impulse entry during the Asian session on Memorial Day. Again, I just got to emphasize that so you guys just understand what the day is and how there could possibly be not much volume. That being said, let's move over to gold if Sharma doesn't have anything to add.
No. So again, I think the data points now that we're sitting at these hourly and 4-hour highs is going to be, again, to highlight unemployment rate from Japan, since this is GBP JPY, your prelim industrial production, and your retail sales. So whatever happens with that, with those data points, I think those could bring in enough volume to help break past these 15-minute, 30-minute highs and then continue pushing.
Absolutely.
There we go.
We could either do this, or we can just, break this trend over here and continue down. All right, so moving over to gold now, looking at the monthly, again, we have been bouncing off this bullish trend line for years now, since 2019, higher lows, higher highs. We do have this, bearish momentum coming back down to that 1830 level, previous resistance over here, due to the rise in interest rates, right? And the continued talk in the rise of interest rates. But what I was talking about this before with Sharma and how I think we got that bounce on gold was the fact that they were going to talk about peeling back on interest rate hikes a little bit and see how the economy is going to be. So we currently have a very strong monthly candle with a bottom wick to fill. Can we fill that candle by continuing back down with some further interest rate hikes, depending on the U.S. data and how that comes out? Or are we going to bounce off this level, more fear in the market, them not increasing rates too much, and price just continues back up from here?
100%.
Looking at the weekly now, this is that little bounce over here. It looked like we were going to close below 1830, retest it, hold a resistance, and then possibly continue down. But we got that bounce off this trend over here, right? Clean trend that we're bouncing off of right now. We did get that strong bullish candle close back above 1830, right over here. This candle closed bullish, but for some reason, we're rejecting this level over here. You can see it to the left. Right there, you see that wick right over there. And then if you go to the left over here, you'll be able to see further price action rejecting that. And then actually, since we're selling the weekly, we have anything over here to the left from the 2008 market crash. Maybe we'll leave it right there if you want. But more importantly, what we're doing right now is kind of rejecting, but we are holding some kind of a support in some of these levels. Get this resistance over here, that could possibly be it. But let's see what we look like over here as far as the lower time frame price action. All right, so now since tapping, you guys remember to the 2075 tapping up here, we ended up, that was from Russia, Ukraine, ended up coming back down, holding the support at 1910, 1920, coming back up to 2000 over here, and then rejecting. Ever since that, we've been in a bearish trend, right? Lower lows, lower highs on gold, until finally holding support at this previous level over here. Previous support and resistance to the left of this consolidation for about 2 weeks, ended up holding support on all these areas. What do you know? We just tapped into 1788 right over here, 1790, and then held support right around 1810 right here. So ever since then, we've been bouncing up. We kind of broke the bearish trend. Not to me, like this could very well end up getting, if we hold that resistance here, this could be respecting the bearish trend and continuing down, and then we have a new trend. But right now, so far, we kind of broke it, and we're holding a higher low. The only thing is these bullish candles are pretty weak. Look to the left, that's a previous support as well. Ever since holding it as a support from a bullish trend, right over here from this level as well, we created this high, we come down to hold support in this level, and then we continue back up from there all the way to 2075. So the question is, do we have the fundamentals to do the exact same thing, react to this level first, hold support in this area, and then continue up from there? Like I said, this candle is a very strong bullish candle with a lot of fear in the market at the time. These candles are very weak, right? You got a nice bounce off this 1870 level right here. I'm just going to shrink that because I don't like how thick those get. There you go. You get that resistance right there. Price holding with a strong bearish candle, get another bearish candle, but we did hold support in this area. So can we start breaking these wicks and continue back down, mirroring these candles over here to retest 1810, or are we going to hold support here and start continuing back up, respecting this bullish trend we have right now? Looking at the 4 hour, we can adjust this just a little bit. Yeah, right around there. Got a little bit of a fake out of this area. Right now, I just want to draw a trend right here that price is about to bounce off of. But more importantly, pay attention to these levels over here. You get very messy over here with a lot of these wicks. You do have this support over here that price has been holding right in this area over here, right? We ended up tapping off of 1870 over here, creating this low, but then, creating a higher low over here as we have this bullish trend coming back up to here, tapping into 1848, 1850, creating another higher high. But now we're starting to come back down to the support over here. So can we break that support and continue right back down? I'm very interested in this wick right over here, possibly getting filled. But even more importantly, we could very well break through this level, this previous support and resistance, and come back down to this support right in this area. Again, this is very messy price action. All these wicks, I don't like it. It's going to be very messy on the lower time frames too. All right, so now what I want to do is just focus more on the more recent support and resistance, and I think that will clear things up for you guys as well. You have this recent support that is now being broken. You have a clean move to the left over here, coming right down into this area. All right. So how many pips do you now have in this area? Get about 43, 45. What I would do right here, since we're in this bullish trend and you're about to bounce off this key area over here, especially as you have like a lot of these wicks and this support right over here, wait for some kind of a retest right here. Right? Wait for this retest. And if you get candles closing in your direction, like a bearish candle close in your direction, get a clean move to the left, you could very well start breaking below. Maybe you want to wait for that close below this level with a clean move to the left. Only got about 35 pips in there, but it could very well happen. I would just wait for this retest right now. If you missed this like little impulse move, this could have been a nice trade right here for you. Anticipating some kind of a volume push around 7 p.m. tonight. Wait for price to break the low of these wicks over here. Stop loss above the healthy top wick on this 1 hour candle. Price flip bearish, pass the low of the previous, and continue down. But if you miss this, just wait for the retest right here and take it down. Just trust me, all right? So with that being said, if that does happen, where do we have safe buys if we get buys? So again, looking at the 1 hour now.
4 hour.
Or 4 hour, thank you. Yeah, I mean, when it comes to some of these time frames over here, I don't think you really have safe buys until you start breaking 1870 up here. Because you get these very weak wicks, very weak candles over here. And I see all bearish price action. I see lower highs being formed. Right? So any kind of safe buys, I mean, maybe you want to wait for 1864 right here. But, I would just wait for like that 1870, 1872 level, and then you could take price right up here.
I think it's that or even bounce off of 1848 because it seems like that seems to be an area of liquidity as well that price keeps tapping into, right? And then every time it taps into it, we see some nice bullish volume.
So you're saying like you want price to come back down into here and then price continue up?
I think that could happen, like at least in today's Asian session, as we're setting up. This is all a technical move, right? So clearly the 4 hours giving you a break and retest. After a price clears out this area, there's really nothing stopping it from coming all the way down here. After this point, every time price taps into it, I do see like some nice bullish momentum right here as well. And then finally here, as we were maintaining that downtrend, we had a sell-off from this point as it was respecting it as resistance. So I think after price bounce off of that, then we can see a bullish push up from there. So I do think that we can have some nice buy opportunities down here. Or as price clears out of all this consolidation, we would highly suggest just kind of staying out of that. But once price clears out of that, then you got those clean buy opportunities to the upside as well.
I like that. Yeah, I was just I definitely agree with this level, like 1848 being a support where we get bounced off of. And I do think that you could get like short-lived sells back down to that level too. You get enough pips in that range, especially if you get a clean setup right here, or even better, like below this consolidation over here. You got a fairly clean move here and a clean candle there that you could possibly mirror with a nice volume push. So wait for the volume, wait for the setup and take this down. But definitely secure down here where we could definitely be bouncing off of, like Sharma said.
100%. So remember, guys, that right now for this week, until we see the interest rates actually coming out, which is going to be the anticipated fundamental, that's really going to move a lot of pairs. Until then, a lot of this is sentiment trading. So look at the economic data, try to understand what does it really mean, but start thinking as an investor. Obviously, all of us are consumers in one way or another, so we already know how a lot of this economic data affects us in day-to-day life anyways. So try to think of it like investors as well. So when data comes out, is it a good thing, negative thing? Is it hurting you as a consumer? And if you are the core of the economy and your decisions are really what impact, how the economy state is going to be, then what does that mean for an investor? Would you invest in your own economy right now, given the economic state? Right. So think of it like an investor, think of the sentiment trading that we have gone over multiple times. And I think that's what majority of the price movements are about. So even last week when we were closing out for majority of these pairs, we closed out positive and a lot of people were confused, why did that just happen? Again, think of it like sentiment trading. Right. We have a lot of fundamentals that are coming out, macro fundamentals coming out, economic data coming out, which are kind of hinting towards where are we sitting right now. With that being said, have a great rest of the week, everyone. If you guys have any questions, feel free to reach out to either of us. For me, the fastest response is on Instagram at SharmaFX, or you can comment below and I would get back to you. For Stefanos, his Instagram is StefanosFX28. And if you guys need any help, want to hop onto a Zoom or anything like that to discuss, anything that you're struggling with, it's completely free, but feel free to reach out to any of us whenever.
Yeah, absolutely. If you guys are struggling with over trading, over risking, psychology, you're not feeling confident about your system or anything like that, do not hesitate to reach out to us completely for free. Like she said, that's how you get better. Just swallow your pride and hop on a Zoom, go through your issues, and let's go. Let's get you better and put you on a nice trajectory of success in the market.
100%.
So guys, have a great weekend, all right? Or great rest of the week and be smart in the markets, all right?